Hey everybody, this is James with WSTrades.com. I want to talk about how to read candlestick charts and draw trend lines and make high quality trades off of the candlestick patterns and also the trend lines. So I am in Thinkorswim here. This is TD Ameritrade's platform, and I'm on the charts tab here. What you want to do, it's probably going to default out. If you're new to Thinkorswim, it should default out to this line style of chart. So you want to go to the upper right here and click on this style button and go down to chart type and make sure you are on candle. And then what you want to do to draw out a trend line is go to the drawings button in the upper right here. I think I had this thing set to the Fibonacci retracement tool. So I'm just going to click this drawings button, go down to drawing tools and make sure I'm on this trend line button here, or this line. And let's zoom in here and go a little bit back, and I can kind of show you what happened here. I'm going to use a real world scenario. This was an actual trade that I made on Splunk based on the candlestick charts and the trend line. So you see this thing peaked out around 225, had a big sell off, rallied back, and then had a big rejection here and a gap down and started to sell off again at this point. So that was kind of my basis for the trend line. So zooming out here a bit, what I did is I went up here to the top of this and I started my trend line, and I dragged that trend line something like down here. So I went to the body of the candle. Let me zoom in a little bit again here. So I pretty much went to the body of the candle here. I did not go to the wick because I kind of went to the body of these candles up here. So I pretty much went body of candle to body of candle, and I had my basis there for my trend line. And at the time, you know, I saw this thing was starting to tick back up, but I was just waiting to see what was going to happen at this trend line here. So instead of being patient or, you know, tell myself, oh, I know it's going to rip back to this trend line, I just waited for it to retrace to this trend line and then, you know, see what happens. So this thing's ticking up, it's climbing. And this is what I saw right here. It approached this trend line, and then there was a big bearish engulf candle. It rejected that trend line perfectly. And this is on the weekly time frame for Splunk. So that was my basis of going short. And what I did there, I think I sold either a 130, 135 call spread, or yeah, I think that's what it was, a 130, 135. So it was deep in the money at the time. So let's see this thing. Yeah, I think this thing had climbed down to about 130. So I sold a short 130 call, and I bought a long 135 call. So at the time I put the trade on, both legs are in the money, and that was kind of my premise there. I'm going to sell this in the money, and my expectation is that the price is going to drop, and this call spread is going to finish out of the money, and I'm going to go max profit. And yeah, this thing, as you can see, just had a massive dump here. So, you know, that's how you can throw up a trend line on a chart and use that trend line and these candlestick patterns to give you a high quality trade. Here you can see as it was approaching this trend line previously that it rejected it perfectly. So sometimes you'll see this as well right here, where you've got the price climbing above it and it looks like, oh, this thing's going to break out. And then by the time the candle finishes, you know, the sellers come in and they stomp this thing down. Let me see if I can zoom in a little bit more here. So sometimes, yeah, you'll see this, you're like, oh, it's approaching this trend line. You know, I want to see what happens here. Are we going to get rejection, or are we going to get this thing to blast off and close through? And you get a bit of a fake out scenario. And this thing pumps above the level, but then the sellers come in near the end of the week. This is the weekly time frame, and they crush it and they leave that wick sticking out. So sometimes you'll see this type of a pattern right here, and that is a great sign that the buyers are not willing to pay more than this for the price, and it just rejects that trend line perfectly, and then you get this massive move down like this. So I would say here, not really based on a trend line, something else to add to this chart, but based on a support level, is Splunk is really rejecting a key support level here around $100. I kind of want to throw this in there. This is more to the candlestick side, but you can see this is, let's zoom out a little bit more here. This is going back to the year 2020 during the COVID crash. Splunk fell to around that 100 level. Looks like the body of this candle finished about $98. And that's exactly where the buyers are stepping in this big market sell-off. So you can see here, we've got 3 candles in a row, massive wick sticking out, massive rejections here. So on the weekly, just based off of candlesticks, it looks like we're going to have good support here, and this thing is going to rip back towards this trend line. So with these 3 candles here, 3 weeks in a row, the buyers are really setting up shop here at about $99, $100. This is definitely looking like a good long entry to me. So if this thing does start to pump back towards this trend line, just keep this trend line in mind here on the weekly. Let's see if we get rejection like we saw here, or rejection like we saw here, or maybe this thing breaks out above this trend line and actually closes above it. That would definitely be a good sign here for the stock and a good sign of strength. So I'll continue to keep you guys updated and provide more videos on how to read candlestick charts and how to trade off support resistance or trend lines. If you thought any of the information here in this video was useful, please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.